I passed my insurance exam with a 92. Harris how? Question 1. Which concept prevents a person from profiting from an insurance claim? Indemnity, subrogation, adverse selection, utmost good faith. The principle of indemnity states insurance is meant to restore the insured to their prior financial condition, not provide a profit. Question 2. A statement guaranteed to be true in an insurance contract is a representation, warranty, concealment, waiver. A warranty is an absolute guarantee of truth. If breached, it can void the contract. Question 3. Statements made by the applicant on an insurance application are considered warranties, representations, material facts, guarantees. Representations are statements believed to be true to the best of the applicant's knowledge. Question 4. What is the deliberate withholding of material facts from an insurer? Concealment, fraud, estoppel, adverse selection. Concealment is intentionally hiding information that would affect the underwriting decision. Question 5. What legal concept prevents an insurer from denying a claim if they previously waived a right? Indemnity, subrogation, estoppel, adhesion. Estoppel is the legal consequence of a waiver. It prevents a party from asserting a right they previously waived. Question 6. An insurance contract is considered a contract of adhesion because both parties negotiate the terms. The insurer drafts the contract and the insured must accept it as is. It requires equal value exchange. It involves multiple insurers. Contracts of adhesion are take it or leave it. Ambiguities are resolved in favor of the insured. Question 7. Which of the following transfers the right of recovery from the insured to the insurer? Indemnity, subrogation, assignment, estoppel. Subrogation allows the insurer to step into the insured's shoes and sue the at-fault third party to recover claim payments. Question 8. The tendency of higher-risk individuals to seek insurance is known as moral hazard, adverse selection, risk retention, law of large numbers. Adverse selection occurs when people with a higher probability of loss are more likely to buy insurance. Question 9. A physical characteristic that increases the chance of a loss is a physical hazard, moral hazard, morale hazard, peril. A physical hazard is a tangible condition, like a slippery floor or poor health, that increases the likelihood of a loss. Question 10. True or false? A morale hazard involves intentional acts like arson or fraud. True, false. A morale hazard is carelessness or indifference to loss. Intentional acts like fraud are moral hazards. Question 11. What principle states that the larger the number of similar exposures, the more predictable the losses? Principle of indemnity, law of large numbers, risk transfer, adverse selection. The law of large numbers is the statistical basis for predicting losses and setting accurate premium rates. Question 12. Which type of risk is insurable? Speculative risk, pure risk, financial risk, market risk. Only pure risk, chance of loss or no loss, but no chance of gain, is insurable. Speculative risk involves a chance of gain, example, gambling. Question 13. What is the consideration given by the insured in an insurance contract? The policy form, the promise to pay claims, the premium payment and truthful application, the signature of the agent. Consideration is the value exchanged. For the insured, it is the premium and representations made on the application. Question 14. If an applicant makes a material misrepresentation, the insurer can increase the premium midterm, void the contract, arrest the applicant, change the policy to a different type. Material misrepresentations, lies that would have changed the underwriting decision, give the insurer grounds to void the policy. Question 15. What element of a legal contract requires both parties to be of legal age and mentally competent? Offer and acceptance. Legal purpose. Consideration. Competent parties. Competent parties must not be minors, mentally incompetent, or under the influence of drugs/alcohol. Question 16. The cause of a loss is defined as a hazard, risk, peril, exposure. A peril is the actual cause of a loss, such as fire, lightning, or accident. Question 17. What is a unilateral contract? Both parties make legally enforceable promises. Only one party makes a legally enforceable promise. It requires two insureds. It pays out one time only. In insurance, only the insurer makes a legally enforceable promise to pay covered claims. Question 18. Which of the following represents risk retention? Buying an insurance policy, using seatbelts, choosing a high deductible, installing a burglar alarm. Choosing a deductible means the insured retains a portion of the risk financially. Question 19. An aleatory contract means values exchanged are unequal. It is based on a written agreement. It must be renewed annually. It covers alien entities. Aleatory means the outcome depends on an uncertain event, resulting in unequal exchange of value, small premium for a large benefit. Question 20. True or false, the application is considered part of the entire contract in life and health insurance. True. False. The entire contract provision states the policy and a copy of the application constitute the entire contract.